Trump tariffs threaten the U.S. automotive industry and beyond. The video highlights a critical development in U.S. trade policy under President Trump, who has proposed imposing a 25% tariff on automotive parts imported from Canada and Mexico. This decision, intended to bolster domestic production, is portrayed as a double-edged sword with potentially devastating consequences for the American economy, particularly the automotive sector. According to the discussion, these tariffs could drive up the cost of vehicles significantly, with estimates suggesting an additional $4,000 to $10,000 per car, depending on the model. For electric vehicles, the impact could be even more dramatic, with production costs potentially surging by as much as $112,000 per unit, as cited from data by the Anderson Economic Group think tank. The reasoning behind these staggering figures lies in the interconnected nature of the North American automotive supply chain. Contrary to popular belief, no car sold in the U.S. is entirely made in America. Even vehicles assembled domestically rely heavily on components sourced from Canada and Mexico, meaning that tariffs on these imports would inevitably ripple through the entire industry, inflating costs at every stage of production. This policy doesn't just threaten manufacturers, it places a heavy burden on American consumers, who are likely to face higher prices at dealerships. The video emphasizes that these increased costs could exacerbate an already fragile economic situation, potentially tipping the automotive industry, and by extension, the broader U.S. economy, into a recession. Stock market reactions underscore this fear, with General Motors seeing a 5% drop in its shares and the Dow Jones plummeting over 540 points following Trump's tariff announcement. The narrative suggests that this isn't merely a short-term shock, but a harbinger of deeper economic turmoil. Experts featured in the video warn that the rising cost of living, driven by pricier cars, could reduce consumer spending in other areas, further weakening demand across multiple sectors. While Trump's intent may be to protect U.S. jobs, the video argues that the immediate fallout, higher prices, reduced affordability, and industry instability, could undermine those very goals, leaving consumers and workers to bear the brunt of this aggressive trade strategy. Stock market tremors reflect deep economic anxiety. The video paints a vivid picture of the financial market's immediate and dramatic response to President Trump's tariff announcement, signaling widespread unease about the economic fallout. Within a single trading session, the U.S. stock market took a significant hit, with General Motors stock tumbling by 5%, Ford shedding 3%, and the broader Dow Jones Industrial Average plunging over 540 points. These sharp declines weren't just random fluctuations. They were a direct reaction to Trump's proposal of a 25% tariff on automotive parts imported from Canada and Mexico. The video suggests that this wasn't a fleeting panic, but a clear indication of deeper, long-term concerns among investors. The fear stems from the realization that higher import costs will squeeze profit margins for automakers, who are already grappling with a fragile industry landscape. As production expenses rise, companies may have little choice but to pass those costs onto consumers or scale back operations, both of which could spell trouble for their bottom lines and stock valuations. What's striking here is the speed and scale of the market's response, which the video frames as a barometer of broader economic dread. Investors aren't just reacting to the tariffs themselves, but to the uncertainty they introduce into an already volatile global trade environment. The automotive sector, a cornerstone of the U.S. economy, is particularly vulnerable, and the ripple effects could extend far beyond car manufacturers to suppliers, retailers, and even unrelated industries. The video implies that this market sell-off reflects a growing consensus. Trump's trade strategy might not deliver the economic strength he promises, but could instead weaken key sectors. For instance, the 5% drop in General Motors shares isn't just a number. It's a warning sign that confidence in one of America's industrial giants is eroding. Similarly, The Dow's 540-point slide underscores a broader retreat by investors who see storm clouds gathering over the economy. The narrative positions this market reaction as more than a blip. It's a vote of no confidence in a policy that risks pushing the automotive industry, and potentially the entire U.S. economy, toward a recessionary cliff, with investors pulling back as they brace for what might come next. Consumers caught in the crosshairs of rising car costs. The video shines a spotlight on the heavy toll President Trump's proposed 25% tariffs on imported automotive parts could exact on everyday Americans, particularly through skyrocketing car prices, with estimates suggesting new vehicle costs could jump from an average of $44,900 to as much as $55,200, or even higher for some models. This policy threatens to reshape the car-buying landscape in ways that hit consumers hardest. The discussion underscores that these price hikes stem from the reliance of U.S.-made cars on parts from Canada and Mexico, meaning tariffs would inflate production costs that manufacturers are likely to pass directly onto buyers. For the average American, this isn't just a minor inconvenience. It's a seismic shift that could make owning a new car, a cornerstone of modern life, feel increasingly out of reach. The video warns that as dealership prices soar, incentives like discounts or low-interest financing may vanish, leaving buyers with fewer options and tougher choices. This burden falls especially hard on middle-income families, who often depend on financing to afford vehicles. The video paints a grim picture. What was once a manageable monthly payment could balloon into a long-term financial strain, pushing car ownership from a practical necessity into a luxury. As new car prices climb, the used car market isn't likely to offer much relief. Demand for second-hand vehicles could surge, driving those prices up too, creating a domino effect across the entire automotive ecosystem. The broader implication, as the narrative suggests, is a potential slowdown in consumer spending. If millions delay or abandon plans to buy cars, the ripple effects could dampen demand for goods and services far beyond the auto industry, threatening economic stability. The video frames this as a betrayal of the American dream, where affordable mobility, a symbol of freedom and independence, slips away from the very people Trump's policies claim to champion. Instead of bolstering the middle class, these tariffs risk squeezing them further, reducing their choices and deepening financial pressures in an already uncertain time. It's a stark reminder that grand trade strategies often come with a human cost, and here, it's the consumer who's left holding the bag, facing a future where the open road feels more like a distant dream. Canada strikes back with economic leverage. The video casts Canada as a formidable adversary in the escalating trade dispute sparked by President Trump's 25% tariffs on automotive parts and other key imports from its northern neighbor. Far from staying passive, Canada has responded with a bold counteroffensive, threatening to wield its economic influence in ways that could sting the U.S. hard. A standout move in this retaliatory playbook is the warning from Ontario Premier Doug Ford and Prime Minister Justin Trudeau that Canada might slash electricity exports, which account for about 10% of U.S. imports and power states like New York, Vermont, Michigan, and Minnesota. This isn't just saber-rattling. It's a calculated flex of Canada's role as a vital energy supplier, hinting at disruptions that could send electricity prices soaring by 30–50% in affected regions and throw U.S. manufacturing, especially the auto sector, into chaos. The video suggests this threat alone has northeastern states on edge, bracing for higher utility bills and potential shortages. But Canada's arsenal doesn't stop at electricity. The narrative highlights other economic weapons at its disposal, like steel, aluminum, nickel, and oil, resources the U.S. relies on heavily. With 30% of U.S. aluminum, 20% of its nickel crucial for electric vehicles, and 1.4 million barrels of daily crude oil imports coming from Canada, Any move to restrict these supplies could jolt American industries and fuel prices skyward. The video frames this as a diplomatic counterpunch, quiet yet forceful, aimed at making every U.S. business and citizen feel the pinch. Canada's leaders have made it clear they won't roll over. Instead, they're pivoting to expand global trade ties and hit back with tariffs of their own, potentially dwarfing Trump's in impact. This isn't just about protecting Canadian workers, whom Trudeau and Ford claim are under direct attack. It's a strategic play to safeguard national interests and remind the U.S. of their interdependence. The video hints that, while an immediate power cutoff might be logistically tricky due to integrated grids and Canada's $2.3 billion in annual electricity revenue, a gradual squeeze or price hike could still turn up the heat. In this high-stakes standoff, Canada emerges not as a silent partner, but as a nation ready to rewrite the rules of engagement, challenging Trump's trade gambit with a resolve that could reshape cross-border dynamics. Global allies push back against Trump's trade blitz. The video underscores a swelling tide of international resistance to President Trump's 25% tariffs on imports, spotlighting sharp rebukes from unexpected corners of the globe, including Europe and even famously neutral Switzerland. This isn't just a murmur of discontent. It's a full-throated outcry from key trade partners who see these policies as a reckless assault on the interconnected web of global commerce. Europe, led by figures like European Commission President Ursula von der Leyen, has taken a firm stand, branding Trump's tariffs a stupid blow to the world's supply chains. The critique isn't mere rhetoric. It reflects a deep worry that jacking up costs on goods like automotive parts will snarl production across borders, threatening industries that thrive on seamless cooperation. The video suggests this European condemnation signals a fracture in long-standing U.S. alliances, hinting at retaliatory measures that could further destabilize international markets already jittery from Trump's trade moves. Perhaps most striking is Switzerland's rare break from its centuries-old silence. Known for steering clear of conflict since 1815 and boasting a robust $800 billion GDP, this alpine nation typically avoids trade spats. Yet, at the World Economic Forum in Davos, Switzerland couldn't hold back, slamming Trump's tariffs as a breach of the fairness and peace it holds dear. The video ties this to a cultural moment, the Basel Carnival, where Swiss citizens donned masks to subtly protest, a creative jab at leadership they view as antithetical to their values. This isn't about economic nitpicking. It's a moral stance from a country that sees Trump's approach clashing with global norms of respect and stability. The narrative frames this backlash as a warning. When even neutral players like Switzerland speak up, the world order might be shifting. Other nations, like Canada and Europe, echo this unease, with the video hinting at a domino effect. Could more countries follow suit, challenging U.S. dominance? This global pushback isn't just about tariffs. It's a referendum on a unilateral style that risks alienating allies and unraveling the delicate balance of trade. As smaller nations reassess their roles, the video posits a provocative question. In a polarizing world, can neutrality survive when superpowers like the U.S. flex muscle at everyone's expense? Economic chaos fueled by policy whiplash. The video paints a troubling portrait of an American economy teetering on the edge, rattled by President Trump's erratic tariff maneuvers with Canada and Mexico. What stands out is the sheer unpredictability. Tariffs are slapped on, then yanked off, only to be reapplied in a dizzying cycle that's left businesses reeling and investors spooked. This isn't a steady hand guiding the ship, it's a policy roller coaster, and the numbers tell the tale. The Atlanta Federal Reserve projects a 3% GDP shrinkage for Q1 2025, a stark reversal from the 3–4% growth that might have been possible under the more consistent Biden-era approach. The video argues this isn't just a blip, but a red flag of recession looming large, driven by a government that can't seem to pick a lane. Companies, unsure whether tariffs will stick or vanish by April 2nd, are freezing investments, slashing production, and laying off workers, all because planning feels like a gamble in this climate of chaos. This instability isn't just numbers on a spreadsheet, it's a gut punch to confidence. The video suggests that a strong economy thrives on predictability, but Trump's flip-flops, lifting tariffs on Mexico one day, tweaking them on Canada the next, have turned the U.S. into a wild card. The auto industry, a linchpin of economic health, is especially hard hit, with supply chains thrown into disarray and costs spiraling. Wall Street's bleeding reflects the panic. A 1.2% drop in the Dow, billions wiped out in hours, and major funds dumping stocks like hot potatoes. The narrative frames this as a self-inflicted wound, Trump. America First vision unraveling under its own weight. Experts in the video warn that if this merry-go-round keeps spinning, a full-blown downturn could be imminent, dragging jobs, consumer spending, and global trust down with it. What's more baffling is Trump pointing fingers at Canada's Justin Trudeau, accusing him of political gamesmanship, despite no election on Canada's horizon. It's a distraction, the video implies, from the real issue, a U.S. policy machine spiraling out of control. The big takeaway: this isn't strategic genius, it's a gamble with the economy's future, and as GDP shrinks and markets quake, the question lingers. Is this the prelude to a crisis, or can the brakes be pulled in time? Energy crisis looms as Canada flexes power muscle. The video thrusts viewers into a tense standoff between the U.S. and Canada, where Trump's 25% tariffs on steel, aluminum, and auto parts have ignited a retaliatory threat that could darken American homes and factories. Canada, supplying 65 terawatt-hours of electricity annually, about 10% of U.S. imports, has warned it might throttle this lifeline in response to the trade salvo. States like New York, Vermont, Michigan, and Minnesota, heavily reliant on this power, could see electricity costs spike by 30–50%, hammering households with record-high bills and disrupting industries like auto manufacturing that can't afford downtime. The video frames this as more than a bluff. It's a chilling signal of how quickly economic sparring can escalate into a real-world crunch. Ontario Premier Doug Ford and Prime Minister Justin Trudeau have doubled down, vowing not to let the U.S. steamroll Canadian interests without a fight, and cutting electricity exports is their ace in the hole. Yet the reality isn't so simple, and the video digs into the nuance. The North American power grid is a tangled web. Flipping a switch to off isn't an overnight option, and Canada rakes in $2.3 billion yearly from these exports, giving it pause. Still, the threat carries weight. A gradual reduction or price surge could squeeze the U.S. just enough to make northern states sweat without triggering a full blackout. The narrative paints this as a high-wire act, Canada balancing its economic leverage with the risk of self-harm, while the U.S. faces a potential energy squeeze that could grind its manufacturing engine to a halt. Trump, unfazed, has dismissed the warnings, pushing ahead with tariffs and daring Canada to act, even as northeastern governors brace for the fallout. The video hints at a worst-case scenario. If talks collapse, costs could double or triple, plunging the U.S. into an energy crisis that's less about lights out and more about wallets emptied. Experts lean toward a softer outcome. Canada might tighten the tap rather than shut it, but the stakes are clear. This isn't just about trade anymore. It's a power play with real consequences. As tensions simmer, the question hangs heavy. Will Trump's gamble spark a crisis, or can cooler heads keep the grid humming? Reshoring dreams clash with harsh realities. The video casts a skeptical eye on the rallying cry to bring manufacturing back to America, as a knee-jerk response to Trump's 25% tariffs on imports from Canada and Mexico. On the surface, it's a patriotic pitch. Shield U.S. jobs by making cars and parts stateside. But dig deeper, and the plan unravels into a tangle of logistical nightmares and economic hurdles that could take years to untangle, if ever. Building a new auto plant in the U.S. isn't a quick fix. Experts cited in the video peg it at 2.5 to 3.5 years just to get one operational, assuming everything goes smoothly. That's a best-case scenario, ignoring the real meat of the challenge: retooling entire supply chains, retraining workers, and upgrading tech to match what's already humming along across borders. The narrative lays bare the disconnect. Trump's tariff push assumes a swift pivot to domestic production, but the clock ticks too slowly for that to save the day. Then there's the cost conundrum. The video hammers home a brutal truth. American labor and operating expenses dwarf those in Mexico or Canada, making it tough to churn out competitively priced cars even without tariffs. Slap on the expense of new factories and overhauled systems, and you've got a recipe for sticker shock that lands square on consumers' shoulders. The promise of jobs sounds noble, but the reality is a slog. Higher production costs could shrink profit margins, deter investment, and leave U.S. automakers limping against cheaper imports. The video suggests this isn't just impractical, it's a gamble that could backfire, leaving the economy worse off than before. Trump, America first, mantra hinges on this reshoring fantasy, yet the pieces don't fit without a long-term lifeline. Think decades of policy support, not months. Meanwhile, car prices climb, demand wanes, and the middle class feels the pinch, all while waiting for a manufacturing miracle that's more mirage than masterstroke. The takeaway: what sounds simple in a soundbite is a beast to execute, and the video warns that betting on it might deepen the very economic rut Trump aims to escape, leaving consumers and industries dangling in a limbo of good intentions and grim outcomes.